קול. טוב, אז שלום לכולם. אנחנו ממש שמחים שהצטרפתם, סליחה על כל הפירוטכניקה של ההתחלה. טוב, זה הוובינר הראשון של הקבוצה שלנו, הוובינר הראשון הרשמי. אני ברק, למי מכם שאתם לא מכירים אותי, אני משקיע כבר שנתיים בשוק הנדל"ן האנגלי. הקמנו אני ויואב את הקבוצה הזאת יחד, בעצם לתת איזושהי פלטפורמה למתעניינים, משקיעים מתחילים, משקיעים מנוסים יותר, בעצם מקום לייצר שיח ולשתף ידע ותובנות ביניהם, בעצם מתוך הבנה שהידע הקולקטיבי הזה והשיתוף שלו בעצם עוזרים להתמודד מול האתגרים שיש לנו במהלך ההשקעה שלנו בעצם המרוחקת באנגליה ספציפית. אז הוובינר הזה בעצם יהיה הוובינר הראשון או הספתח כאילו לוובינרים נוספים רבים, תוך כדי אני עושה אדמית, סליחה. עליך? אוקיי, סבבה. אז הוובינר הזה בעצם יהיה ספתח לוובינרים נוספים בהמשך. מה שחשוב שתדעו שאנחנו בעצם, גם הוובינר הזה בעצם מוקלט, מי שרק יצטרף עכשיו. טוב, אז בלי יותר מדי...
I'll do it in few sentences. So I'm Yoav Gross. I'm also managing this group with Barak, investing in real estate in the UK for about three and something years. And I used to live in the UK, where I did my master degrees in Oxford University, and then a startup over there. And Barak and I established this group about 6 months ago, but we had a WhatsApp group for I think over 2 years now. Yeah. And this was the kind of the base for the Facebook group. And Barak, please present Wayne, and let's hit the webinar.
Okay, so without further ado, I would like to give the honor and give the stage to Wayne. Wayne, if you can present yourself.
Good evening, everybody. It's a pleasure to be here. It's a pleasure to meet you all. I'm Wayne, and I'm a UK-based mortgage brokerage, or I run a UK-based mortgage brokerage. Barak, are we going to share your...
Yeah, I'll share the slideshow. Yeah, of course. That's also important. Sorry.
It's all right.
Yeah. So just a sec. Share on screen. So can everybody see the slideshow?
Yes.
Cool. So just a sec. Yeah. So you may proceed.
Fantastic. Well, guys, look, I'll present tonight in English. If anybody has any questions throughout the presentation, by all means, raise your hand or speak. I'm more than happy to answer any questions. And if you want to ask questions in Hebrew to Barak or Yoav, then by all means do. You don't have to wait until the end if you don't want to. First, I thought it would be prudent to explain who I am and what I do and who my company are. And I've got a bit of a blurb here, but essentially I run a UK-based mortgage brokerage called DMI Finance. Now, we've been arranging finance for clients as a company since the year 2000. So the company's been trading for 21 years. And I've been at the firm since 2006. So I've been there in a month's time, 15 years. As a brokerage, our speciality is arranging investor finance, not for UK residents' own homes, nothing particularly easy. We don't look for the easy or the ordinary. All of our clients are investors. whether they be UK investors, foreign nationals living in the UK, foreign nationals living outside of the UK, we're there to assist them. And that's with all forms of UK property finance. So traditional buy-to-let mortgages, and all of these will be available to you to some degree, which perhaps you'll investigate in the fullness of time, but it could be a UK buy-to-let mortgage, it could be bridging finance, it may be a more specialist buy-to-let, a house of multiple occupancy, or a multi-unit freehold. It might be a commercial or semi-commercial property. And that's essentially how we work. And our focus is on generating relationships and assisting you from the very start of your journey right up until you get to be a very big professional landlord. We have, in terms of our client base, our clients vary quite considerably. I was explaining to Barak when we were speaking very recently that our largest client has a UK portfolio. He's a UK-based landlord, albeit, but he has a portfolio of 400 properties. And our smallest client has no property, but they're still a client because ultimately we're going to develop the relationship with them. They will buy a property and they need to know what's available to them in order to investigate the options available to them, in order to have the confidence to go and buy a property. So they're still a client. So that's about me. Barak, I don't know if you want to translate anything or if we should move to the next screen.
No, I just think it's worth mentioning that, I'll say it in Hebrew, ויין בא עם הרבה מאוד ניסיון לתחום, הוא עם ניסיון של למעלה מ-15 שנה, הוא מתמחה בלקוחות בינלאומיים ובאסטרטגיות מימון שונות ויצירתיות. Wayne, I think we can progress to the next slide.
Fabulous.
Okay, just a sec. Can you see my screen? Can you see this?
Okay, cool. So tonight I thought we'd simplify, the topics that we have, so and focus on really the most pertinent, the most worthwhile points to understand, and really, in my view, the most valuable points to talk about would be, what are the benefits of buying with a mortgage? What do lenders look for in a potential applicant? What do they want to see in me? What different mortgage products are available? And you'll see in a few slides' time, I'll give you a sample of products that are available at today's market. So you can really get into the nitty-gritty, the minutiae of the products. What risks might be associated with taking a mortgage? What may well mean or make a lender less comfortable in lending on a property, and what may well be defined as an unmortgageable property. And then we'll go into some case studies to give you an understanding of what sort of properties we've done recently for people in very similar situations, possibly to you. And then we'll open the room up to some more questions if there are any at the end. Okay. So next screen if possible then. Right. So the first point that we were talking about there was very much why purchase with a mortgage or take a mortgage on a property you already own. And I think the most important thing to consider is that it enables you to leverage against your limited funds. None of us, unless you are multimillionaires, in which case I'm probably speaking to the wrong crowd, but unless you're very, very, very wealthy, you would benefit from taking or borrowing finance. It enables you to leverage against somebody else's money, enabling you to borrow more effectively and to buy more properties rather. So the points are, why would you do it? Well, you can leverage against your funds. You can increase your cash flow. If you're, and I'll go on to give you an example in a moment's time, but you can increase your cash flow. If you're borrowing against more than one property with the same funds, that you would have otherwise put just to one property, well, then you're increasing your cash flow. You're getting rent from 2 properties rather than 1 property, or 4 properties rather than 1. And hence you're also increasing your return on investment. You're reducing the impact of voids. So if you take, for example, if you have your money in 1 property and that property is vacant, well, you've got 100% voids. If you've got your money in 2 properties, I mean, it's simple maths, and I know it might seem obvious, but if you have your money in multiple properties, you're splitting or you're reducing the impact of those rental voids. If one of your properties is let and one is vacant, well, you're still getting a return on your investment. You're still getting reduced rental voids. It enables you to affect very easily the BRRR strategy. And the BRRR strategy is to buy, to refurbish, to rent out, and refinance. And it enables you to effect that, to leverage against the property. I always say to any investor in the UK, be it living in the UK or abroad, you make your money in property essentially in 4 ways. You buy a property, hopefully for less than it's worth. You carry out works to increase the value of the property. You see capital appreciation, growth in the value of the property. And of course, you see the cash flow. So, you know, all of those work very well in tandem with the BRRR strategy. It enables you, following on from that, to take money out. If you're buying a property less than it's worth, if you're enhancing its value, if you're then remortgaging it against the new enhanced value, taking money out, it enables you to put that back into your next property and cycle the cycle continues, speeding up ultimately the portfolio expansion. Okay, now I thought I'd put that into perspective. And if we say you have a typical investor has a pot of £100,000, I have £100,000, what do I want to do? Well, the ultra cautious me says, oh, well, I won't take a mortgage. I'll buy 1 property for £100,000 and that's great. That's where my money is. But actually, if you're leveraging against property, the benefits of a mortgage are exponential, because that same £100,000 can be split between 4 properties. So I'm putting in a 25% deposit on each property. I'm still only using my £100,000, but I now have 4 properties that the chances of all of those being vacant and encountering rental voids at the exact same time are very, very slim, far slimmer than, of course, 1 property being vacant. The cash flow is greater because I'm getting a rental income on each of those 4 properties. I'm getting a capital appreciation, an increase in value when prices are increasing on all 4 properties. And the chances are I'm getting a better return on my money, because if you take, for example, I have a calculator here, and if we take a typical scenario, assume that we're borrowing 75% of the value of the property. So we're looking at borrowing on 4 properties with my £100,000, putting in a £25,000 deposit for each of them, versus borrowing 1 property at £100,000. 1 property at £100,000, that's great, but it's bringing in my rent of £600 a month, for example. Whereas 4 properties, you're bringing in £600 per month, so £2,400. Yes, you've got a mortgage payment on it, on all of those mortgages, and we've got a combined mortgage value there, 75,000 times 4, 300,000. But assume for argument's sake, we've got an interest rate of 5%. Well, 5% on £300,000 borrowing, and I'm hoping that everybody's following this. but 5% on £300,000 is £1,250. Okay, I'm getting in £2,400 rent on those 4 properties, which is creating then a cash flow of £1,150, versus had I put that money into one property, I'd have just received the cash or the rent from that one property, which is that same £600. So you can see just from demonstrating the power of leveraging against properties, you know, all of the aforementioned points, mitigating against voids, leveraging enable you to buy more property, to increase your cash flow, your return on investment, and ultimately enabling you to mitigate against the risk of rental voids. Okay. Barak, anything to add?
Yeah.
Or...
No, I think it was clear enough. I think we can move to the next slide.
Fabulous. So we're all here to see whether you guys, Israelis, can secure finance on properties in the UK. Well, it would be a pretty poor show if I said no. So I can assure you, you can absolutely secure finance. That's what we're here for, right? We're here to see what finance can be available to you. So rest assured, there is finance, in theory, for anybody on anything. And I've said that quote probably for the last 15 years of doing business, because the reality is it is true. There will absolutely be finance available for you as Israelis buying in the UK. Now, it's all about knowing the limitations and all about making sure that the product available to you is palatable to you, is attractive to you. You're not in the UK. It may not be the same finance that is available to me. It may not be the same finance that's available to somebody else, or it may not be the same finance that's available to Barak or Yoav. But it doesn't matter. What matters is whether it's palatable to you and attractive to you. So the most important things to understand is that there will be fewer lenders that are willing to lend to you. Okay, you will no doubt incur, in some instances, many instances, higher rates than you would be able to if you're a UK investor living in the UK. There will be stricter terms. They may well, some lenders might reduce the level of borrowing they'll lend. They might require the purchase price to be higher. They might require that you have a larger income than they might if you're a UK investor. There will be varying criteria for varying lenders, but there may be stricter terms. There'll be longer processes, and I think that goes without saying. You're not in the UK. Lenders will want to make sure that you have somebody, perhaps a notary, locally to you, witnessing the documents, signing the document, witnessing you signing the documents. It will be more protracted for you to liaise with a UK solicitor than it would be perhaps for me. You've got to post documents back and forth. You know, it is a longer process, and ultimately it's extra paperwork. But as I say, you know, strategy is what it's about. Strategy is key. You know, you can disregard what anybody else can get, so long as what's available to you, that's really what matters here. Next screen, if I may. So what does lending look like? Well, on the next screen, I'll go into it in a little bit more detail, but I think the key to understand is that every lender's criteria varies, and each lender's criteria does not remain static. Okay, hence the need for a broker. If it was very easy, you wouldn't need me. You would go direct to a lender, and if their criteria remain static, then you'd put all of your business to that lender. The reality is that's not the way it works. Lenders' appetite for business, their risk appetite, changes frequently. And you'll see on the next screen, I mean, Barak, we were talking about one lender and how their rates only changed to become far more competitively than they were a week ago this week. But in terms of what a lender is looking for, by and large, they're not looking for you to have any experience. Okay, some lenders will want more experience requirements than others, but you won't be excluded from arranging finance if you don't have experience. There will be lenders that will lend to you. And often there are no minimum income requirements. Okay, the most important thing for a lender is not your background income. They will want to see that you have some background income, as I've mentioned here, to cover background voids, to cover your background expenses. But really, the primary focus, as it is with a UK investor, is that your income, the rental income, covers the mortgage payments at a certain threshold. The key is, with a bit more on top, that the rent covers the mortgage payments. That's their ultimate focus. Okay, and we'll elaborate on that in a moment's time. Next screen, if I may, please, Barack. So what terms are on offer? Again, like I mentioned in the other screen there, they do vary. Okay, so I don't want you to look at the next screen and say, okay, well, that's that lender's criteria, and this is this lender's criteria. It will change. This is a snapshot in time. But there are loans from as low as £50,000. Okay, and strategy might well be, as I've said here, typically from £100,000, but strategy might say, well, I don't really want to be buying £100,000 property, Wayne. I want to be buying £40,000, £50,000 properties. And my apologies, bear with me. Sorry, guys, my fiance's had a friend round, and she just opened the door. My sincere apologies. So there are aggregate borrowing facilities available. So on a £50,000 property, because of the options being more and more restricted at the lower end of the market, can you hear me okay? Right.
Yes.
My apologies.
Yeah, we can hear you. All the while.
Good. So yes, to recap on that slide, loans from £50,000 available. Okay, but most lenders would typically want it to be £100,000. But don't look at that and say every property must be worth £100,000, because the strategy might be that you create some aggregate borrowing facility. So you pile in multiple properties that may well not individually meet that lender's expectations and their minimum loan, but combined they do.
Okay, Wayne, do you need the next slide?
I wasn't sure if this was a question for me. Sorry.
No, it's not a question. Somebody forgot to mute.
No problem whatsoever. And then, guys, just to understand how much a lender will lend, it varies from lender to lender, but there are lenders that will lend up to 80% loan to value. So 80% of the purchase price on a purchase, and 80% of the value of the property, which presumably will be higher than the purchase price, on a remortgage on a property that you already own. So yes, please, next slide, please, Barack.
1 second, Wayne, maybe just before diving into the details, because the next slide is the most interesting one. I'll do a minute in Hebrew. And then maybe I have a question, because I think that one of the most interesting things in borrowing in the UK is the fact that you can have an interest-only mortgage, which is not usual in Israel. We don't have such mortgages in Israel. אז אני ככה אחזור בקצרה על הסלייד הזה, כאילו לקראת הסלייד שמדבר על התנאים עצמם. אז מדובר על באמת, כמו שוויין אמר, מעל 50,000, אבל בדרך כלל באזור ה-100,000, אבל זה מאוד תלוי, כל לנדר יש לו קצת את התנאים שלו. אבל משהו חשוב שאנשים לפעמים באמת, כמו שהוא גם ציין את זה, שמפספסים, העניין הזה שאפשר לקחת, נניח יש לכם 2 נכסים או 3 נכסים, שכל אחד שווה 50,000 או 40,000 או 60,000, אז אפשר לקחת על שלושתם ביחד, כלומר אפשר לאגד אותם לבקשה אחת, כן יהיה יותר עלויות, כי צריך לתת evaluation של 3 נכסים למשל, ואז אפשר להגיע עד ל-80% loan to value, כלומר עד 80,000 לצורך העניין לנכסים ששווים ביחד, או אחד ששווה 100,000 פאונד. ועכשיו אני אשאל אותו, אפשר אחר כך גם להגיד את בעברית, הדבר שבאמת הכי מעניין זה העניין של ה-interest only, כלומר ריבית בלבד, כמו ריביות שלוקחים לצורך העניין הלוואת בלון חלקי, שנקרא בארץ, לוקחים הלוואה והם משלמים רק את הריבית, ובעצם סכום ההלוואה נשאר קפוא בזמן. כלומר, לקחתם 100,000 או 80,000 לצורך הדוגמה בשנת 2021, ל-X שנים, נניח לסך הכל 20 שנים, אז עוד 20 שנים עדיין אתם תהיו חייבים רק 80,000 פאונד, כן, שילמתם את הריבית בדרך, אבל יש לכם cash flow חזק, ובסופו של דבר הנכס בלונג רן די בוודאות עולה, ואז זה יוצא מאוד כלכלי, אבל עכשיו ניתן לוויין לדבר על זה כמה מילים. So Wayne, about the interest only. So I'm calling it the magic of a mortgage in the UK because this is a very special and of interest for myself as an investor. So if you can say a few words about how it works, maybe about the period of the loan, that you have a fixed rate for 2 or 5 years, if you can say some words about this area too, and why it's so good to have an interest-only mortgage.
Well, yeah, absolutely. I think the most empowering thing about interest-only mortgages is it creates the cash flow. And the cash flow is what enables you amongst enhancing the value of the property, amongst buying a property below market value. It's what enables you to grow and to continue the cycle with your portfolio. If you were taking a capital repayment mortgage, which is the opposite of interest only, if you're repaying the debt, well, your monthly cash flow would be very minimal. I was saying to Barak when we spoke last about that client of mine that has a portfolio of 400 properties. Now, it's if you understand the term, kind of the point of critical mass. Your portfolio, when you're taking mortgages on an interest-only mortgage, there comes a point where clearly the cash flow that you're generating from these properties will more and more quickly enable you to put the funds in for your next property, and your next property and your next. And the more you buy, the more rent comes in. It's a self-fulfilling prophecy, because all of that is creating cash flow. So interest only is a really valuable tool. And it's not something that a lender would lend on somebody's own home. In the UK, property you live in, and you can understand that. The reason being that when somebody's 75 and they've not made any attempt to repay their mortgage, well, they've nowhere to live and they've got to sell the house. But on a buy-to-let, the risk isn't there for a lender. They know that they're not kicking you out of your home. They're lending on an interest-only mortgage, and ultimately, when the mortgage comes to an end in 30 years' time, or however long the mortgage term will be for, you can repay that mortgage by selling the property. And that's how they treat it. Now, when you take a mortgage, you have, and I don't know how it works, I know in lots of Europe, you take a fixed rate mortgage for the length of time that you have the mortgage. I don't know how it works further afield. How does it work in Israel? You take a mortgage for a 25-year period, but you have a mortgage for a 2 or a 5-year fixed period initially, the product?
So you have, it depends, you have a few, you're taking basically 3 streams or 3 small mortgages that can compile into the entire one. And each one has its own details, its own interest rates. Some is fixed interest rate, some is צמוד למדד, או צמוד, whatever. I don't know the terms in English.
Index. Yeah, index. I don't know how to say it either, but like
variable rate, it goes up and down.
Yeah.
It goes up and down based on the living index. So if you have, and you have also something that is fixed to the prime interest rate. So in Israel, it's the central bank interest rate, which is now 0.1 plus 1.5. So we have like usually, and you can take. It used to be up to third, now it's up to 2/3 of the entire mortgage in this rate, because the central bank want to defend the customers in case that the general interest rate will go up someday. It will happen, yes. And maybe people tend to forget it. So it's more complex than the UK. In the UK, you have one interest rate. And it's whether fixed or
If you the backstory is probably the same as Israel. Lenders, our Bank of England base rate, our kind of national interest rate is 0.1%, the same as yourselves. Lenders don't offer base rate trackers, something that tracks the Bank of England base rate, because there's no appetite for anybody to take it. Because why would you take a rate on hedging your bet that the Bank of England base rate would drop when it can't drop really anymore? So historically, they did offer tracker rates, variable rates, but that's because the Bank of England base rate was at 4.7%, and there was some margin in it. Now there's just no appetite for the consumer to take it, and therefore there's no appetite for the lender to offer it. The way that normal...
Sorry for interrupting. I think like somebody wants to ask a question. Nir? Because he raised his hands twice. I don't know.
Yes. Hello.
Hi.
Can you hear me? Hi, everyone. Thank you, Yoav and Barak. I have actually two questions. Is that list is just for an example, or these are lenders that accept non-UK residents like us?
So Nir, I'll go on to explain. This is a snapshot in time. This list is an up-to-date example of a selection of the lenders that will lend to foreign citizens currently today buying in the UK. So this is
that because some of the names I already know. So these are for mortgages or for bridge loans?
These are normal mortgages, term facilities. So there are, of course, bridging lenders that will lend, and there's far more bridging lenders that will lend than some of the term facilities here.
Okay, excellent. And second question, if I may, is what is the preferable structure by the banks for non-UK residents like us? Because just to explain, the best scenario for an Israeli investor is either for tax purposes is to invest either as an individual or either as a partner in a partnership, a UK partnership or an Israeli partnership, which buys directly the property. So this is the best tax structure for Israeli investor. The thing is that buying above 100K houses, properties, meaning that I rather be a company in the UK, but better off being an individual in Israel, which means because then I can claim back as an expense the interest paid upon the mortgage. So what I'm asking is, can we basically, what is the preferred structure by the bank, and how can I do it? Like would you accept, for example, a company in the UK, an SPV held by an Israeli resident, 100%, buying a property, and the shares are held by in trust by UK residents or whatever? Would you accept your banks would accept such a structure?
Yes. Nir, you said the shares would be held in trust by UK residents?
by a UK resident, for example, or by a non-UK resident, be another Israeli trustee, for example.
Yeah. Nir, you're speaking my language because you're speaking about strategy, and that's what all of this boils down to. And I think one thing you have to understand is not all lenders are created equal. Whilst they may look like they offer the same and have roughly the same criteria, if you look, some have got income requirements, most haven't. The reality is, Nir, all of these lenders will have slightly differing criteria. So some will be happy to lend to offshore companies. It doesn't have to be a UK SPV. Some of these lenders will stipulate that it must be an SPV. Some of these lenders will be happy to lend to you as a foreign investor buying in your personal name.
Yeah.
It is not as streamlined as you think. And I was on a call with a UK investor and their accountant and their solicitor, because often
Wayne, just a comment. I think I don't know. Can you hear me? Yes. So sorry for interrupting. Let's try to give it another minute, and then we'll give time for questions in the end.
Yeah, maybe it's best if we'll go over all the slides and then keep the questions to the end.
That's absolutely fine, Nick. Come back to me later, and we can have something about that a little bit more in depth. I think your inquiry is quite focused in particular.
Yeah, thank you very much. Yoav, may I say just one thing in Hebrew, if that's possible?
Okay.
אוקיי, הסיבה שאני שאלתי אותו, אני פשוט רוצה פה, אתה יודע, מהניסיון שלי, לקצר את הדרך לכולם. כי לקצר את הדרך זאת אומרת שלמשקיע הישראלי, וחלילה אני כרגע לא מתיימר לתת ייעוץ משפטי, אני פשוט נותן מהניסיון האישי שלי. למשקיע ישראלי שמשקיע בצפון אנגליה לדוגמה, בניגוד אליי, אבל משקיע ישראלי שמשקיע בצפון אנגליה, אז עדיף לו מבחינה מיסויית בארץ להשקיע בתור אדם פרטי או בתור שותף בשותפות, ולא בתור בעל מניות בחברה. בזה אנחנו מסכימים. העניין הוא שאני רוצה לפקס פה, בסוף, כמו שהוא אומר, לפקס את זה, זה רק כטיפ, ואני כמובן אמשיך להקשיב בהנאה. זאת אומרת שאם הנכס, אם הבן אדם, אם המשקיע הישראלי רוצה להזדכות על ההוצאות מימון בסוף, נגיד והוא לקח משכנתא כבר באנגליה, צריך לקחת משכנתא והוא רוצה להזדכות על ההוצאות מימון האלה, על הריבית, מול המס באנגליה וגם בישראל, בעצם אז הוא חייב להיות אדם פרטי או שותף בשותפות. במבנה של, סליחה, הוא חייב להיות רק חברה, מ-2016 רק חברה בעם באנגליה יכולה להזדכות בנכסים שהם רזידנציה למגורים על הוצאות ריבית.
ניר, אני אקטע אותך,
יחיד ושותפות לא יכולים לעשות את זה.
ניר, זה
כמובן, אתה יודע,
לא, אני חושב שזה נקודות מעולות פשוט.
לא, אני לא רוצה לקחת את השיח למקום הזה, אני רק אומר שכל מי שמחפש משכנתא כרגע פה, בוובינר, כמוני גם, אז אסור לו לדעת שהוא מחפש משכנתא בתור יחיד, אבל בנכסים אולי, אני לא יודע מה הסכום המינימלי לחשב את זה, אבל בנכסים אם הוא מתכוון לקנות נכס בעל 100,000 פאונד, והמימון יהיה לדוגמה מעל 75,000 פאונד, אז כדאי לו לחשוב כבר באמצעות חברה.
אוקיי, זה נקודה מעולה.
יחזקו בעבורו בנאמנות או כל מיני.
בוודאי. ניר, אני פשוט מציע...
ואם אפשר לכוון גם את הבחור הזה פה שנותן לנו את ההרצאה.
בסדר, אבל בוא ניתן לו ויין הכין את זה. ניר, אני פשוט, אנחנו רוצים להמשיך, ברור לי לגמרי, אבל זה גם לא וובינר שהוא של מבני מיסוי, אני לגמרי איתך ודיברנו על זה גם כמה פעמים, גם לא מעט פעמים. בואו ניתן לו להמשיך ונחכה, בסוף נגיע אם יהיה זמן, ויהיה פה עוד הרבה דברים שהם, אתה יודע, במקומות אחרים מבחינת רמת ההבנה, אנחנו עוד חלק מגיעים פעם של השילומים על מימון באנגליה, פרה. בואו ניתן לו להמשיך, יש גם study cases ו-case studies, אז בואו ניתן לו להמשיך, ניר, ואני מקווה שנגיע לזה בסוף. אוקיי? Yeah. Wayne, may please continue. Yeah.
No problem, no problem. But yeah, I mean, strategy is key. Strategy is key, and these are very much the options on for Israeli investors being the people at the forefront of the application, might I say, and which might be useful for Nir, and perhaps we can have a conversation about it later, because I'm not sure it'll be of total value for everybody, but there are some very attractive products if you are buying properties with a UK-based individual. So you could have a UK-based director and you could be the shareholder of the company. But if that is the case, there are some UK lenders that will lend on traditional UK mortgage rates. So you will not be party to the mortgage because you are a shareholder. The UK director will be the applicant and the only party to the mortgage. But we would shave quite a margin off these rates. We might get them down to low threes, which would be traditional UK rates. So, you know, understand that this is not a concise example. It is not every single product available based on every single circumstance. We'll move forward and I'll explain how to kind of strategize and how we really hone in on the exact products available to you, the individual or the company or the structure, and on what property. But this gives a selection. I don't know if you want to go into that in any more detail, guys. I guess you've seen it.
Yeah, I think it was enough time. Like it had its screen time. Fantastic. Maybe we can move to the next slide. But what's important to note here is that, as you can see, each product is different from one another. You know, based of like you need some income requirements, like minimal income requirements, or some experience as a UK landlord. All of those are different from like product to product, and of course, also the rates that you're seeing here is up to date to this point, but of course they can change in the future. It depends on the period of time and like the times we're in. Like now, it's kind of post-COVID or during I don't know, third outbreak. So it varies from time to time. So it's important to note, but it's also again depends on your strategy and what you're looking for to achieve with a mortgage. So I think we'll move to the next slide, Wayne.
Sure, perfect. Bear in mind, guys, these lenders are not focusing wholly on foreign investors. That is not their absolute niche. You are not the only applicant type they're lending to. And the one big pressure that lenders will find that will affect a lender's appetite to lend and ultimately affect their interest rate will be the amount of business that they're getting. So, for example, there's a UK lender for UK investors that recently doubled their minimum loan size. That's not a permanent measure, but why wouldn't they, to stunt the applications if they can earn twice as much by taking on the same level of business that they were before? Then they'd be mad not to. So, you know, lenders' criteria does change, you know, frequently, and that's just the way it is. That's why we're here. That's why we're in the market. If it didn't, there wouldn't be a need. So what are the risks of buying with a mortgage? And these risks, for some of your benefit, extend to any form of finance secured against a property. So bridging finance too. The main risks are, I guess, and it's not, I've called it here, increased likelihood of deal loss. And you know, I would say that if we understand the circumstance and we understand the time pressures and we're in constant communication with the vendor, if it's a direct to vendor proposition, or if we're in constant communication with the agent, then there shouldn't be increased likelihood of deal loss. but it's understanding that if a mortgage is in play, you won't be as hot-footed, you won't be as quick to react as you would if you weren't taking it with a mortgage. If you're not taking a property with a mortgage, you might just say, well, you know, I'm not worried about searches, I'm not worried about this, I'm just going to go ahead and complete. Well, unfortunately, when you're playing with somebody else's money, that's not possible. A mortgage lender will go through their legal process, they will go through their due diligence process, and ultimately that will take more time than perhaps it would have taken you to buy it with cash. So, you know, it's a minor point. I really don't see it happening that frequently if there are time pressures that we're aware of, because it's all about the communication with you, with the solicitor, with the vendor, with the lender. And if you do things in the right way, then you get the right outcome. You will have, what we didn't explain on the last screen, about the 2 and 5 year fixed rates. So, you know, the general consensus when you secure a mortgage on a UK properties, you have a mortgage term that will extend perhaps for as long as you think you'll own the property. A buy-to-let lender on an interest-only basis will lend to you for, say, 30 years, 20 years, some lenders 10 years, but quite a long period of time. But then you have the interest rate that is a 2 or a 3 or a 4 or 5 year fixed rate. And there is a requirement for a lender at the end of that 5 year fixed rate to reassess. You will revert to typically a variable product, a variable rate product, which is made by the lender. And you will then have to reassess it. And that might be a point of us going back to the same lender and securing what's known as a product switch, so securing a new product with the same lender, or it might be a point of remortgaging it to another lender.
Wayne, may I stop you and explain it in Hebrew? אז מה שוויין בעצם אומר פה זה שיש את התקופה של 2 עד 5 שנים, וברגע שהתקופה הזאת מסתיימת, אז בעצם הריבית שאנחנו מקבלים על המשכנתא עשויה לעלות. ואז מה שבדרך כלל עושים, בעצם מחליפים את המוצר, בעצם מחזירים עם משכנתא חדשה. Wayne, you may continue.
Thank you. The next point would be changes in lenders' criteria. Now, this is something that seldom happens, exceptionally rarely. You know, it's very rare if you have an application in with a lender and their criteria changes, that those criteria changes would affect your application. It doesn't typically happen. The changes in criteria that come about after your application is submitted generally don't affect you, but they can. If we go back to the beginning of COVID, so last February, March over here, we saw a couple of lenders, even if you had an application in, and one of those lenders on the last screen, Together Money, they decided, actually, despite having pledged money to certain applicants and the offer being there, they decided to rescind, to claw back, to pull back those mortgage offers and chose to change the terms. It's very, very rare, but it's a risk that you need to be aware of. If your circumstances change, then ultimately, you know, it's twofold, both after the mortgage has taken place and before. Ultimately, if your circumstances change after you've taken a mortgage and you had an income before and now you don't, well, then by taking a mortgage on the property, of course, you know, there is an element of risk. If a property is void and you've got a mortgage against it and it's your only property, well, then ultimately you've got to find a way of paying that mortgage each month. And if your circumstances have changed, that you no longer have the money to pay it that you did before, well, there's a risk. Of course, in addition to that, there is the chance that your circumstances will change prior to taking the mortgage. So prior to completing on that mortgage, if your circumstances have vastly changed, well, then the lender is aware of that, then they do have the opportunity to reassess whether they're willing to continue with the application. So the last screen mentioned one lender that wanted an income of £75,000. or the shekels equivalent of £75,000. If you've submitted an application, you're a month off, a week off, a day off completion.
It's a gross or net, by the way?
It's gross.
Okay.
Absolutely, it's gross. And your income changed, well then, you know, there could be an issue. There is a reliance on lenders' surveyors. So ultimately, you might be very confident, we might be submitting a valuation. We've gone to Hampshire Trust, who in principle have a minimum value of £100,000 or a minimum loan of £100,000. We were applying for £100,000, but the valuer downvalues the property, and now the loan that's available is £90,000. Well, because of the reliance on the lender surveyor, because the lender surveyor hasn't agreed with ultimately what you've said, it may mean that the lender then, it falls beneath their minimum requirements and they wouldn't lend. Again, you know, there are preventative measures that I would always stress somebody do on a remortgage. I always suggest that somebody, and I don't know if you've ever come across it, prepare a remortgage pack. So it's all about justifying to the valuer that we know what we're doing, that we're trying to get in his possession, something that we feel evidences why we believe the property is worth X. And then, of course, there is the risk of repossession. If you take a mortgage and you do not pay the mortgage, well, then the lender will likely take possession of the property. They will sell it. And if there's money left over, of course, it comes to you after the debt has been cleared and any interest payments owed. But that's the ultimate risk. Next slide, if that's okay. Yeah, Barack. So, unmortgageable. Now, this is a very fluid list, and I don't want anybody to get particularly caught up in it, because there are lots that aren't on here, and there are lots of things that can go from one side to another. But ultimately, there are certain factors that will limit your options in securing a mortgage. Okay, and there are some things that for a normal mortgage will create the property to be unmortgageable. That does not, however, mean unfinanceable, because as Nia mentioned earlier, there are things called bridging finance. And whilst the rate is much more expensive, it serves a purpose. They will lend on properties that have far greater issues that ultimately they expect you to rectify, but they will lend on those temporarily whilst you rectify those issues, and then we go for the mortgage. So in order to be considered mortgageable, really a property must have a kitchen and bathroom, and it must be in a livable and lettable condition. So, you know, we all follow trends, we all follow fashions. I'm not talking about a property that is, you know, has a quartz countertop kitchen and it was only installed last year. It could be a kitchen that was installed in 1990 that's, you know, walnut units and floral carpets. It may not be to your taste, but could a paying tenant occupy that property? Would a paying tenant occupy that property? That is really what they're looking to see. They want the property to be livable and lettable in its current condition in order to obtain a normal buy-to-let mortgage. So the sort of things that you can't secure mortgages on, and it would be short-term bridging finance, would be properties where there are severe structural defects that you intend to rectify, and then we remortgage. Damp, condition-wise, regulated tenancies. So there's something in the UK called a regulated tenancy or a statutory tenancy, and that is someone that's been in a property since before, off the top of my head, 1986. So before 1986, the AST, the assured short hold tenancy, wasn't a thing. And it's left a slight issue in that people that were on a tenancy before 1986 are classed as regulated tenants, and they have the proposition or the ability to reside in that property forever at a reduced, far below market rent. And the problem with that is that in the event of repossession, in the event that you don't pay the mortgage, or even in the event that you sell the property in 20 years, the tenant could still be there. And that isn't palatable to a lender. And then the maybes, well, there's quite a lot of maybes. Really very cheap property, absolutely it's a maybe. It may not be a maybe on one property, because as we've seen on the previous slide, the value of one property alone wouldn't meet the lender's minimum loan requirements. But if you put them in as an aggregate facility, the chances are it's a doer. The chances are it's something that we can do. Non-standard construction properties. There are a lot of properties built in the post-war era, the late 40s, 50s, where they were built as temporary housing. And a lot of them were built by non-standard construction methods, built up very quickly to house people. A lot of those are mortgageable. They may not be mortgageable with all lenders, but they are financeable with certain lenders. High-rise flats. A lot of high-rise flats in London, Southeast, and Barak, our client that owns the 400 properties. Almost all of his properties are high-rise, former local authority owned flats in London, 7 stories, 8 stories. He has mortgages on each and every single one of them. You can secure mortgages on commercial and semi-commercial. Yes.
I think you're breaking off.
Because oh, I'm breaking off.
Yeah, now you
Now I'm fine. Yeah, I'm just suggest that we have a few more slides, and I think that I know that I personally a bit tired, so I suggest that maybe we'll a bit speed it up. Then move to the case studies.
Okay.
Okay.
Let's go for it.
Okay, just a sec.
Perfect. So these are the case studies, and these are the things that really are the kind of meaty element. I apologize if I'm speaking too slowly. I know I'm speaking English, and I want to make sure that I speak slowly enough that everybody understands.
It's perfect. Your English is just in the right place. Thanks.
Fantastic. So this is a client of ours, and a typical case study, one that we've completed very recently with one of the lenders mentioned on the previous slide. So he came to us for a buy-to-let mortgage from the start. He bought a property for £120,000. We secured an interest rate of 4.2%, which worked out on an interest-only basis to be £315 per month. He borrowed 75% of the purchase price, so he put down his £30,000 initially. We secured a 2-year fixed rate, and it was a relatively long, and I know there are some horror stories in terms of timescales. I know some people have seen longer than 4.5 months, but I can assure you I have seen far shorter than 4.5 months. So, you know, it's all about strategy. Time, if time is critical, then we'll make sure we go to a lender that would operate faster. But this took 4.5 months from the processing of the decision in principle, the lender saying, okay, we've looked at your circumstances, we're happy to lend to you, to drawing down and completing on the mortgage and obtaining the keys for the property. The next case study, Barak, do you want to go through your case study?
Yeah, I can even say it in English. Say it in Hebrew, sorry. אוקיי, אז זה האמת היא דוגמה לנכס שלי, בעצם משכנתא שקיבלתי מגייטהאוס. קיבלתי, הנכס בעצם נרכש ב-95,000 פאונד, ה-LTV שקיבלתי זה בעצם 80%, קיבלתי אותו את המשכנתא באינטרסט אונלי, זה אומר שהתשלומים החודשיים זה בעצם 252 פאונד לחודש, ריבית בעצם של 4%, למשך 5 שנים, וללא קנסות, ERC זה בעצם קנס פירעון מוקדם, גם לי לקח משהו כמו 4.5 חודשים מאז ה-decision in principle, שזה בעצם האישור של הבנק שאתה בעצם זכאי לקבל משכנתא, וכאן הצגתי קצת את המספרים של מבחינת הרנט זה 700 פאונד לחודש, ולכן ה-ROI יצא לפני הפייננס 7.5%, ואחרי בעצם קבלת הפייננס 14.5%. זהו, ויין, you can proceed if you want.
Fantastic. And then the latest case study, this chap, Sparos, as you can possibly tell from the name, he's not Israeli, he's Greek, but he was living, I think, in Singapore. Now, so he came to us. This is slightly different because his strategy is very much not to leave his money in the property for any length of time. He didn't want to do the proposition that Alexander did, which was buy a property on a 2-year fixed mortgage and leave his money in it for 2 years before he took it out. Spiros wanted to buy a property, enhance its value, refinance that property very quickly after purchase or as quickly as possible, leveraging against the property and putting his money into the next property. And then that cycle will continue. The BRRR strategy. So Spiros bought a property with bridging finance and then we refinanced it. So he bought the property, and one thing I've realized here, I haven't included the cost of works. If anybody's interested, I can find it out, but ultimately he's enhanced the value. So he bought the property for below market value at £115,000, borrowing a facility of £86,000 gross against it on a short-term bridging facility. Now, this bridging facility cost him a particularly high interest rate, but that's no different to what a bridging facility would cost to a UK-based applicant. It cost him 0.75% for every month that he had it. But it completed very quickly. From the date of application to the date that he completed, he drew down the money, he got the keys for the property and commenced the works. It took 4 weeks. He then completed the works and refinanced the property. Now, bear in mind, he bought the property beneath what it was worth. He enhanced the value. There may have been some capital appreciation there too in the time, but I very much doubt a significant amount. And he achieved the remortgage valuation of £140,000, leveraging £98,000 against that. So I don't know, 98, 148. So he didn't borrow that much, he borrowed 66%. Or maybe he borrowed 70% loan to value, I said here. He secured a rate not as favorable as Alexander's, 4.7% per annum. An interest rate of 4.7% per annum, costing him £383 a month. Now, he took a 5-year fixed term on the exit. And the reason he took a 5-year fixed rather than a 2-year fixed is because 5-year borrowing is not that much more expensive than 2-year borrowing. And as at that point, he'd enhanced the value, he didn't foresee any significant capital appreciation over that 2, 3, 4 years. So why would he want to go to the hassle of taking a 2-year fixed and being in a position that he had to then decide to switch products again in 2 years? It made sense for him to take a 5-year fixed facility. Does that make sense to everyone? And that refinance from the date that we started the application to the date that we drew down on the money and paid off the bridging loan, and he raised the extra borrowing to put into another property and replenish some of his funds, took 10 weeks. So it's not perhaps what each of you will be looking for. Each of you may be looking for something far more traditional. You may not want to buy a property that needs significant works. It may be much more of a turnkey investment, but there are solutions there for each and every one of you. That's what I'd say. The next screen, please. Perfect. So how does the application process work? Well, ultimately, I think you've understood that everything is specific to the individual. So ultimately, Barak and Yoav have an inquiry form that I would suggest that you complete, giving your very, very basic details. That will come to me, and I will call you and I'll discuss, or call or email or Zoom, or whichever you feel comfortable with. We'll set up a virtual meeting, and we'll get an understanding, high level of your circumstances and your requirements. And if I can, in that conversation, I'll understand and tell you roughly where I see finance sitting for you. Now, ultimately, of course, we need to know a little bit more about you than just what we found out in a 20-minute, half an hour conversation. And we'll send you what we call our fact find form. And our fact find form is a questionnaire that will ask you any questions about you. Who are you? Where do you live? What do you do for a living? Do you have any income? And do you own any other properties? All very relevant, because as you've seen on other screens, some lenders want experience, others don't. Some lenders want income, others don't. On the back of that, knowing what property you're looking to purchase, or knowing an idea of the property that you want to acquire, we can outline what options are available to you. And that is very much a table of rates. So it will say the interest rates, the arrangement fees, the monthly payments, the total amount payable, based on your specific circumstances for that specific property. Because I can't assure you enough, everything is unique to you and unique to the property. After which we would get you approved in principle, and ultimately we'd submit the mortgage application. And then it goes through the process with the lender. So they'll underwrite, they'll review it, they'll do their due diligence, they'll make sure they're happy with you and the property, and they'll carry out their valuation. After which it will go to the offer stage, and that's their formal mortgage offer that they've issued to you. There's nothing really going wrong with that, other than it then goes to the legal process, and then it's in the solicitor's hands, alongside us, liaising with the solicitor, to finalize the legal aspects and ultimately draw down the money. Now look, we are a broker and a professional firm, and as a professional firm working exclusively for you, you're our client, not the lender, we charge a fee for the work that we do. Now, Barak and Yoav have negotiated a fee reduction for members of the Facebook group, and you know, I'm more than happy to offer that to you. Our typical fee is 1% of the loan that we arrange, payable on completion and only ever at completion. Now, Barak and Yoav have negotiated me our fees down with me and my business partner, and we have confirmed that we will reduce our fees by 15% to the group members. Okay.
Wayne, thank you very much for this generous discount for the members. May I suggest some or tell some superlatives about you in Hebrew, if I may, and just to, if I, yeah, so בגדול, כמו שראיתם, אנחנו פה כבר שעה ומשהו, וויין, ככה אנחנו קיבלנו עליו המלצות מאוד חמות, עובד עם אנשים גם ישראלים ומכל העולם, כמו שראיתם בהרצאה, סופר מקצוען, ובזה חשבנו שזה נכון להביא אותו
יואב, אתה...
וובינר, וגם בזה, אני נקטע, אז דבר, רק אני אשים את הלינק.
אוקיי, מגניב. אז מה שבעצם יואב רצה לומר זה שאנחנו היינו בקשר עם ויין כבר תקופה, ויין הוא מגיע עם הרבה מאוד ניסיון, ומה שנקרא, יש לו ניסיון נרחב בעצם עם משקיעים בינלאומיים, ואנחנו יצרנו בעצם איזשהו הנחה לקבוצה, בעצם 15% מהפי הרגיל שהוא בדרך כלל לוקח. יש איזשהו לינק שיואב הולך לשתף בצ'אט, אני חושב, בעצם להשאיר לוויין פרטים. עכשיו, יואב, רגע, בני, שאלת, לא הבנתי, העמלה היא 1% או 0.80%? אוקיי, אז מה שבעצם וויין אמר, שבדרך כלל הם לוקחים 1% בעצם מההלוואה, סליחה, מערך ההלוואה, זה אומר שאם נגיד קיבלתם הלוואה של 100,000 פאונד, אז הוא לוקח מזה 1%, אז לקבוצה הוא יעשה את זה ב-0.85%.
זה כלומר 15% הנחה על הפי הרגיל שלו.
כן, בדיוק. עכשיו, יואב שיתף בצ'אט את הלינק להשאיר פרטים בעצם לוויין, אבל אני חושב, יואב, שאולי כדאי שניגש כבר לשאלות.
כן, כן, לגמרי.
ניר שואל אם זה בנוסף לעמלה של הבנק. אני חושב שכן, זה בנוסף, זה פשוט העמלה של הברוקר. אז, אוקיי, רגע, שנייה, אז...
Okay, so let's start the questions.
I think...
So let's go back to the one that was before of Nitzan Moore. So when we will go to the Q&A session, if we may. So, yes, so the first one, I think that you answered it several times. Right, Barak? We discussed the length of the
length
process.
of the the length of the process.
Irrelevant.
Yeah, I think Wayne, approximately, like to say the time scale of a typical mortgage for a foreign investor.
You know, you have to be aware that there is very much, and I would say this, of course, but there is no such thing as a typical applicant. The timescales have to be based on your circumstances. You know, Barak, we were talking about some real horror stories where people have taken 8 months, 9 months. Have I seen that? Yes, I have. And we were talking specifically about one lender, and I was explaining the backstory about their kind of progression into the market and the reasons behind their service levels and things. You know, for me, you have to look at the wider picture. I want to have a conversation with someone. I want to understand what they're looking for and what their time pressures are. If it's a purchase, can it wait 9 months if you've gone to direct a vendor or if you've gone through an agent? No, it can't. Simply can't. You know, can it wait that long on a remortgage? No, not really either. Some lenders will complete far quicker than others. And it's then dependent on whether you want to make the compromise to say, okay, well, I know Gatehouse will lend to me at 4.3%. And believe me, Gatehouse are slow. They are slower than some other lenders for sure, but they needn't take anywhere near the length of time that I understand some people's applications have taken. But, you know, if there is a time pressure, then there are other lenders that will not be anywhere near as slow that may charge a...
But maybe maybe they would have higher rates. That's what you're trying to say. I see, like, we have a few more questions when in the chat and also in the Google Sheet, so let's maybe try and do it a bit quicker.
Absolutely. One thing I would say is look at what it makes you. Don't just look at the cost of the interest rates. If the interest rate is 4.5 versus 5.2, yes, it's 0.7% per year difference. But if one of them can complete 4 times quicker than the other, well, then what can you do with the money that you're releasing 4 times quicker? Can you make the saving back? It has to be about strategy. It cannot just be about the one point. You have to look at the bigger picture.
Yeah. So, like Avi asked, What about local bank account? Do the lenders obligate to hold a UK bank account, and what are our options? And some asked actually about digital bank accounts. So
Yes.
maybe if you can say a few words about it.
All lenders will want to see that you hold a UK account. They'll want to see that the money typically comes from a UK-based bank. Now, there are...
It has to be a traditional bank or a...
No, so I guess it's the same in Israel as well. There are lots of non-traditional banks that have entered the market. Your Tide, your Monzo, your Revolut.
What about Wise?
Wise? I don't think I've come across Wise.
It's previously known as TransferWise.
Oh, TransferWise. I've come across TransferWise. I can't recall off the top of my head whether I've had a client use them as their only UK bank. But look, there are no hard and fast rules that it has to be a traditional Lloyds, Barclays, NatWest. That's simply not the case. Lenders will be happy if you have a bank with Monzo. I'm sure Wise, Revolut, Starling. There may be some out of the 15 lenders that wouldn't be happy with it. But believe me, as a broker, we leave no stone unturned. We'll make sure that we know about you. That's a whole process of going through the fact find, understanding our client, having a really good understanding of the scenario, so that what we don't do is get 3 weeks into an application and it transpire, I didn't realize they wouldn't lend because Barak only has a Wise account and he only owns 10 properties rather than 11. You know, we know everything that we need to know before we submit an application.
Benny is asking if I bought properties that are undergoing refurbishment, can I and there still are no rents? Can I start a process of getting a mortgage?
Absolutely.
Yeah,
we're speaking about this, Barak, and that's a really good question, Benny. You know, timescales can be reduced quite significantly by the strategy of starting the application before you're ready to have the valuer go out. So ultimately, you don't want the valuer to inspect the property until the property is livable and lettable. So but that doesn't mean that we can't start the application a month before you're ready to have the valuer go out.
You can do the know your client, right? Like you can start
still start the underwriting process.
Yeah, cool.
We're just forcing the lender. Now, what I would say is that it's not with the lender's willing participation that we do that. If we said, oh no, the property won't be ready for 6 weeks, then they'd say, well, don't come to us now. But I know, and you know, that lenders can be slow. And, you know, so it's about playing it to our advantage. And, but there's no reason why we couldn't get the application in. We'd be foolish to have the valuation carried out until it's ready, but there's no reason why we can't get the application in far sooner to speed up our processing times.
Okay, Nitzan is asking if when you buying in an auction, if there's an option for a mortgage or it's always cash. And also if I bought like an auction a property in cash, can I do refinance for it when it's bought like under a UK company that's registered in England?
I'm glad you asked the question. Zani, was it Zani?
No, Nitzan.
Nitzan, sorry, Nitzan. Nitzan, I'm glad you asked the question because if you see my company, DMI Finance, 20 years ago, we were set up at the time as an auction specialist. Auctions are something that are very well known to us. We advertise in the UK at 14, 15 auctions. If you look in any auction catalog, you know, there's a chances are you'll see our advert at some of the larger UK auctions. Normal mortgages for a UK investor can complete and do complete, we do it every day, within an auction timescale, 28 days, 20 working days. that can happen. So if you're buying with a UK investor and you're a shareholder, if that's a strategy that we decide is right for you, which may not be for the vast majority of you, I appreciate, then you would be able to secure a normal mortgage. If, however, you're buying at auction and you are a foreign national without any UK investor, well, I would say the normal mortgages would take longer than 20 working days. That doesn't mean that you can't secure finance, because that would be where bridging finance comes into it. And bridging lenders will absolutely pick the right lender within the auction timescale for a foreign national.
There's a few questions in the Google Sheet. I'll just, does owning no, we actually talked about it. Just a sec. Does having a UK traditional bank account versus like let's say digital account like Monzo gives any benefit, or does it really matter? Okay.
No, and this is the same. You're encountering the same dilemma that UK investors have when they set up a limited company. Lots of lenders they scrutinize the application for a limited company bank account, and lots of the non-traditional, more digital lenders are far more willing and able to react to that fast. So, many people are proceeding with non-traditional banks. It shouldn't make much of an issue to you.
Okay. Also, Yaniv is asking in the chat, do European citizens have any advantage in getting a mortgage, for example, in terms of rates, maybe quicker process?
Only if they live in the UK. If they don't live in the UK, they'll be looking at the exact same options as you guys. Like
if somebody has a European citizenship, it doesn't help in any way in reducing the rates or something? Okay. One more questions, just a sec. I'm sorry, it's like many of those questions have been answered by you during the presentation, so I don't want to, how long it takes for refinance, like a remortgage process? Is it faster than getting a mortgage for a new buy?
It should be. So if there's finance against the property, so it depends from lender to lender. The one thing that has started to take time, you'll be aware of the stamp duty changes in the UK. So there was a hold on stamp duty, the tax that you pay when you acquire a property, the stamp duty land tax. When you buy a property in the UK, you pay it. That was increased to a minimum purchase price of £500,000 for some time, which meant that there were a lot of transactions going through. It slowed things down. If on a remortgage, the lender does not require local authority searches, and I don't know if any of you have come against that, it's nothing to do with necessarily your property, it's local authority searches. So it will look at developments in the area, it will look at highways plans, it will look at lots about the surrounding areas, things that might impact might have an impact on your property. If a lender doesn't require local authority searches, which by and large they don't on a remortgage, it can speed things up, because local authority searches, given the sheer volume of purchases that were recently going through, have become quite slow. But on a remortgage, there will be a number of lenders that wouldn't require local authority searches, meaning that it should complete somewhat sooner than a purchase. And of course, any purchase will take longer, irrespective of you guys living abroad, because there's an extra solicitor in the chain. Your solicitor's got to correspond with the seller's solicitor. The seller's solicitor has to correspond with them. It's a couple of links that can be avoided if you're remortgaging a property.
Itai is asking if you can receive or start the application for a mortgage for a property that is being built, like in the process of building.
So is it a property that they're building or somebody else is building? Is it
somebody else is building, but it's not yet ready? That's
so it's off plan?
yeah,
Is it?
off plan.
Yes, at 100%.
Can I ask a follow-up question on the auctions thing?
Of course, Gidi.
Yeah. How do you mitigate the risks that the building may not be inhabitable in the mortgage terms, and the second risk is you essentially have to pay as soon as you win the auction. So what happens if the mortgage doesn't go through?
Well, you have two things. So when you buy a property at auction, I mentioned that you had 20 working days, right? So you have 20 working days, which effectively is 28 days on a typical UK auction. On top of that, which is a very well hidden asset, you also have an additional notice period on a UK auction. So you also have an additional 10 working days. Now, so that's 2 weeks. So 2 weeks on top of the 4 weeks, you actually have 6 weeks. Nobody tells you that. The auctioneers don't tell you it. Your solicitor doesn't generally tell you it. I'm telling you it. And it's there in almost all auction contracts. If you look at the general terms and conditions of a UK auction, I think it's condition G11, I think, on the standard auction terms and conditions, you have an additional 10 working day notice. So you have 6 weeks, not 4 weeks. That's a lot longer than you would typically need. Now, you must understand, Gidi, that a buy-to-let mortgage will not complete for a foreign investor buying in the UK within an auction timescale. I mentioned that before. I mentioned that if you were buying a property with a UK investor and you were a shareholder of the company, then a normal mortgage could complete. Bridging finance is an entirely different product. As I mentioned before, bridging does not require the property to be livable, does not require the property to be habitable. It could be a property with no windows, no doors, no roof, no walls, a pile of rubble in the middle of a field, and a bridging lender would see the value in it. So it is incredibly unlikely that if we do things in the right way, that we would have any issues in arranging finance within the auction timescale. And I can say here, hand on heart, having been attended hundreds, thousands of auctions, nobody has ever gone to an auction that we haven't been able to assist. We've never had somebody lose their deposit from coming to us and buying a property at auction. But you're very right. The difference is that you exchange on the day of the auction. You make yourself legally bound to buy that property. The hammer, the gavel goes down, you pay your 10%. You do not get that back if you go beyond that 6 weeks.
Thank you.
Thank you very much.
I see that there are still questions in the chat and also in the Google Sheet, but I think we need to wrap it up. Guys, if you maybe we can switch to Hebrew just for include. חברים, אני חושב שפשוט יש לא מעט שאלות ויש דברים קצת יותר ספציפיים לאנשים כאלה ואחרים. מי שרוצה להשאיר פרטים לוויין מוזמן בעצם בלינק שיואב שיתף, ומי שרוצה להוסיף עוד שאלות במסמך ואפשר לרכז אותם וגם לשלוח לוויין גם מוזמן. אנחנו פשוט רוצים...
גם סיכמנו עם ויין שאפשר להשאיר כאילו פרטים, עושים איתו פגישה וכל הדברים נקרא לזה בדיוק המדויקים לעסקה שלכם, יכולו להתייעץ איתו, כמובן שהייעוץ הראשוני ואיך לבנות את זה וזה, זה כמובן שלא עולה כסף, וכמו שראיתם, הוא מקצוען על, הוא באמת, בוא נגיד, אני פגשתי לפחות 10 ברוקרים, והוא הכי מקצוען ביפר שיצא לי לראות. אז זהו, אתם שומעים את השאלה או שנראה כתוב העידן שלי גרוע, אני לא יודע, יש פה נפילה, שבסדר.
אז כן, אז יש פה עוד 34 איש איתנו שאנחנו רוצים להגיד לכולכם תודה רבה שהגעתם והשתתפתם ושאלתם והחכמתם. כמו שאמרנו, זה בעצם הוובינר הראשון מזה הרבה וובינרים נוספים שאנחנו מתכננים בהמשך. זהו, מקווים שהיה מלמד ומעשיר.
And thank you very much, Wayne, for a very good webinar. We learned a lot, and we hope to be in touch soon. And good night, everyone. Enjoy your weekend.
Thank you, everyone. Have a pleasant weekend. And as the guys have said, fill in the form. You know, there is no obligation. I'm here to help, and I'll give you as much time as needed. So feel free to get in touch, and we'll speak soon. Thanks, guys.
Thank you so much, Wayne.
Good evening.
Bye.
Bye. Thank you.
Great weekend. Bye-bye.